Oh, pop up here. Okay. These are the stock picks for the week of May 11th, 2015. These being these here. We're going to be looking at the top 5 stocks for the week in terms of growth, and some of these will be good investments as well. I'm just going to do them in alphabetical order. We're going to start with AGNC, which is a REIT. And REIT is a company that invests in real estate and then pays out you as the investor in those funds that it gathers from real estate. So this generally is something you will invest in, not swing trade on. But if you look at the stock real quickly, you'll see that we have a gap here, and this might be an area gap. We're not sure yet. However, we do have something interesting, and that is a bullish Harami candlestick pattern that has been confirmed by a doji star. Now this is a bit risky because often when you see an upward doji star, it's a generally it's not risky, because when you see an upward doji star, it's a deliberation. It tells you that the investors believe the stock might be a bit undervalued, but they're not sure yet. There is indecision at this point, and generally it goes upward, but sometimes it can drop downward precipitously, and in that case you want to get out. But I'm going to say this is going to be a safe investment for 2 reasons. One, typically the doji star will continue upward, and if we fill this area gap, we've increased our value in this stock by what? Do a quick calculation. We're going to go up to what? 21.50, and so that's maybe a $1 increase. $1 divided by 20.63. So we've made a 5% gain once that gap closes. But more than that, an REIT is good because it pays out a monthly dividend in how much you invest. So let's say you've invested, well, we don't care. Let's say you've invested $1,000 into this. You're going to get back $138, and it pays out every month. So this is something you can invest in. Wait for that 5% rise, then wait for that dividend to pay out, and once you get that dividend, you can get out of the stock. So that is AGNC. Good investment and probably decent in the short term too. I recommend you hold on to this for at least until you get that dividend. So you could be holding on to this for more than a month. Next is Dow. You probably heard of it before. It's a chemical company. For this stock, we're looking at the candlestick pattern that is called a abandoned baby. An abandoned baby is a red candlestick with a doji star below it and then a green candlestick above it. This type of gap is okay when you see it in this 3 candlestick pattern. It doesn't imply that this is going to close. It's not an area gap, not a traditional area gap. Instead, you don't even consider it as a gap. You just look at the 3 candlestick pattern, and statistically it's something like 80% the trend will continue upward. So we're making a pretty safe bet on Dow, and Dow is at a top, it's at a peak, monthly peak. Generally you don't want to buy at a high, but in this case it's okay, and it's without a resistance, I believe. We can check that out by going to stockta.com, typing in Dow, and seeing if there are any thick solid red lines above our current trading price. If there are, and there aren't, if there are, you might want to stay away. But in this case we're at a peak. There's no sign that we are going to stop at a certain value above us, so this is a decent investment, at least for the short term. You can swing trade this, position trade this, and because the sky's the limit, you can actually hold on to this. Another good trade/investment is Directv. Directv has recently been talking about merging with AT&T, which would give it and AT&T 25% of the pay TV market share. If that happens, you can expect a spike in this stock, and we are also seeing a 4 candlestick pattern that looks very similar to the abandoned baby pattern, but not quite the same. This one's a little more risky because this tiny little gap here might close. I don't even think that's a gap. Am I mistaken? The low is 89.13. The high is 89.06. So there's a tiny gap here. It might dip a bit, But what we're seeing again is that deliberation type of pattern where the investors are indecisive as to whether to buy or to sell. But I'm going to tell you to buy, not just because of the candlestick pattern, but because of what's going to happen with Directv in the future. Analysts put that merger at 70 to 75%. If it does merge, we're going to see a spike in this stock, and that could give you some pretty good gains. To just check the other indicators of Directv, go to stockta.com, put in DTV, and you're going to see that just like our previous stock, Dow, we don't have any resistance above us, so the sky's the limit, and we do have support below us protecting us from a strong loss. Everything else looks pretty good here, so this is a decent investment and also a decent swing trade. Let's move on to JP Morgan. This is a stock I frequently play with options because it seems rather volatile. This is something you're going to want to hold on to just for a short term because of that volatility. It tends to drop a bit and then go back up a bit. What we're seeing here is a 2 candlestick pattern. We're seeing what looks to be similar to a bullish engulfing where the green candlestick eats up the previous red candlestick that has been confirmed by a upward green candlestick. I'm going to go ahead and go to JPM. Everything is bullish, as you can see. There's no resistance above us. There's support below us. The only worry is the stochastics, which say that the stock is overbought. In that case, it might dip downward, but generally, if this trend holds, even if the stochastics say it's overbought, it's not really overbought. So the stochastics are a very conditional type of indicator, but they are something to be a bit concerned about when you're getting in at a high. And we are getting in at a high, but I'm going to say this is a safe bet. Swing trade this, go with it until you see a resistance level above you, and then get out. So you might see a resistance form at about 75 or 67.5. At that point, if it keeps hitting that number but it doesn't pass it, just get out, take your gains, and walk away. Last one, MS, Morgan Stanley. Generally a slow-moving stock. Again, you see a green candlestick eating up a red candlestick. That's a bullish engulfing, confirmed by a up green candlestick. And Morgan Stanley, I believe, is also much like JP Morgan in that it has no resistance above it and a strong support below it, as you can see. So this is also a safe one. I don't recall, though we can check, if Morgan Stanley and JP Morgan pay dividends. I believe JP Morgan is more of a growth stock and Morgan Stanley is less and probably pays dividends. Check it out real quickly. You can always check if a stock pays dividends by going to Morningstar and checking the yield. It pays a very low percentage of dividends. Not really worth holding on to, but you can play it much like we are playing JP Morgan. Ride it until you see a resistance level and then get out. JP Morgan, Morningstar is always a slow site. Again, tiny yield. Not really worth holding on to. But if you like it and it keeps going up and you see no resistance above you, then why not hold on to that yield? And I believe they're quarterly. Yeah, they're quarterly. Hold on until that yield comes out and then get out. Okay, so that's it. Those are the 5 stock picks for the week of May 11th, 2015. Take the one you like and go with it. This time, unfortunately, I don't have any low-cost penny stocks. The lowest cost is probably this REIT, and if you don't have a lot of money to invest, you might want to skip this week and wait until next week, or go back to last week and see if there are any decent low-quality or low-cost investments that I recommended. That's it.